Thank you so much for being here. So let us just kick off sort of more holistically. Joe, obviously you work a lot. You see the numbers, and you from across companies, across sectors. What do you see when you look at those disclosures? Where are businesses exposed? Where's the exposure for businesses, and where are perhaps some of the areas that businesses don't fully appreciate in terms of water risk?
Thanks, Matus. Well, first of all, it's lovely to be here, and I'm glad that water is part of this conversation because, as we know, water is a cross-cutting thread that runs through so many other sustainability and resilience issues. So thank you for organising this. A few reflections in response to that. So CDP is an environmental data platform. We collect data on corporate environmental footprints worldwide. We aggregate, synthesize, analyze that data. We make it available to institutional investors, asset managers who want to understand what's the risk exposure in my portfolio according to the investments that I'm making in real economy companies. So we're really in the business of seeking to quantify and sort of tease out the risks, the dependencies, the impacts that companies have in the real economy. And my role in that context is really just looking at this from a freshwater perspective. In recent years, we're seeing disclosure on water trending upwards. So in spite of the sort of ESG backlash and sensitivities, controversies around sustainability conversations globally, water has been continuing to go up the corporate agenda if we're using the CDP system as a proxy. So we're looking at about 10,000 companies that disclosed in 2025 on water. I think that reflects both, on the one hand, a growing awareness and understanding of water issues, which is a positive thing. It's something that many of us have long advocated for. The reality is also that the risk exposure is severe. So this is not nice to have. This is not, okay, well done, you've done climate, you've done decarbonisation. Now it's time to think about water. This is a really fundamental material business dependency, and that comes through in the data. There's one statistic I'd like to pull out from our recent data set. Around 70% of companies who report on water through CDP tell us that they map their supply chains, which is great. 70%, it's a pretty hefty majority. That means 30% of the companies disclosing to CDP are not mapping their supply chains. And out of those 70% who do, 73% are only mapping their direct suppliers. And what all of that means is that that's positive when it comes to awareness across the market in general, but it's a very nuanced story because we've got a lot of companies who are basically not able to shine a spotlight or not yet willing to shine a spotlight on their upstream risk exposure. And we believe that that's an area that is going to continue to grow in importance as we look at supply chain volatility getting worse on the global scale.
Yeah, absolutely. No, and thank you for pointing that out, because in the sort of energy space, we have been having the discussions around Scope 3 emissions for a long time now, and it's still a huge challenge. But in water monitoring and disclosures, I feel it's even greater challenge. So I will definitely would want to dig deeper into that a little bit. But before that, Coline, from your sort of in your concrete work, can you give us a sense of where do you see the sort of biggest exposure, the biggest risks? How does it manifest itself? Is it in your sort of operations? Is it in supply chain that Joe mentioned? And sort of how does it, as a sort of global actor, how does it play out across different geographies?
Yes, and perhaps just before answering, 2 or 3 figures about Accor. So Accor operates more than 5,600 hotels in 110 geos. So it gives you the scale of Accor. And when it comes to water, out of this more or less 6,000 hotels, 1/2 of our hotels are in water-stressed areas. So that's why this topic is a core business risk. And your question is really spot on, especially because if you look at operations without water, we simply can't run our kitchen, our pools, our gardens, and so on. So that's why the topic is really a daily topic in our hotels. It's not a new topic, but thanks to CSRD, CDP, the last 2 years, we put a lot of focus on this one. And you can imagine how complex is this with the number of geos. Yeah. Because first you have to get all the invoices from all your hotels everywhere, trying to understand the data, where it comes from, or there is a data leakage here, where the consumption comes from. And just to give you this figure, because we don't realize that in our hotels, in one room, in one day, we spend more than 500 liters per customer. So, and I would say it's an average, meaning that if you spend one day in a luxury hotel, it's much more because you have pool, spa, and so on. So that's why each liter counts. And coming back to your question, saying where are the risks? They are everywhere. Water stressed areas for sure in Middle East, Asia, and so on. But if you look at Spain, you know that 2 years ago we were obliged to close some of our pools. We compete with all the industries around hotels. So it's not an easy topic, especially because when you want to engage your network around water consumption, it has to go from our CEO to everybody in our hotels, including housekeepers, chefs, and so on. So it's massive work to onboard, I would say, everybody and to train them, because the thing is that with energy it's easier because energy is more expensive. Water, very often, it costs almost nothing. Right. So that's why, and of course, and I could explain what we did. We did a lot around what I would call hard skills, training, furniture and equipment and so on. But the thing which has really worked well at the end is gamification, meaning being sure that people feel and bringing a bit of competition inside with a name and shame and so on, because otherwise they would say, okay, it's a no-brainer. You're in the UK, I would say, okay, water. It's not really a topic. So that's why when you have this global core business risk, trying to find the right lever to engage the company is not an easy thing.
So gamification when it comes to sort of consumer interface.
Okay. Exactly.
Can you give us an example of that?
Yes, but just as an example, last year, in July, we organized everywhere in the world what we call water races or water week. And CEOs were launching this everywhere in the world, trying to gamify. And of course, there is a system of award after this. And what is really interesting is that it allows us to engage everybody in our hotels. So, for example, if you look at the Sofitel Mumbai, they were so passionate about the topic that they built a short film to showcase what they were doing. The water bottling system, the laundry system, training their gardener and so on. So it seems stupid, but it's a daily, I would say, task, especially because the turnover is quite high in our hotels. So when you want to keep the pressure, it helps. And perhaps last thing, I don't want to play with this always, but we are trying to ensure that at all levels of the company, they had a STIP, meaning short-term investment plan, based on water consumption. And even our CEO was part of this STIP. So it helps to cascade then internally. So of course, we can't play with STIP all day long, but at the end of it, it shows that it's an important topic in the company.
So really incorporating it throughout the levels.
Exactly.
Vertically, yeah. That sounds it's a really important element. We will talk about that sort of a little bit more. But before that, Tom, also Coline mentioned that like in the UK, traditionally, historically, water has not been seen as much of a sort of business risk, particularly. What is the situation today in your experience working with businesses? Is that changing?
It's changed already, and it will continue to change more. So for those that don't know Business Stream, we have about 300,000 business customers that we supply water and waste to, and we also supply a whole range of water efficiency, scarcity, stewardship solutions to those organizations. if you take a step back, the Environment Agency published a report last year that said by 2055 will be about 5 billion litres per day over demand in the UK. Okay? Today in the UK, all of the businesses combined use about 3 billion litres of water. Okay, so the over demand in 30 years' time, which will come very soon, is really going to outstrip, the supply will outstrip. So it's a very real problem. The problem that I see is that people see that as a cliff edge 30 years away. And it's not, because depending on where you are, what you do, the summer that you've had, the winter that you've had, those issues are happening today. So we're currently working with a hotel. It's not one of yours, Coline. So, but they have had to have the yield on their abstraction licenses for their private supply tempered, and they will not be able to produce enough from their private supply of water to irrigate their land and run their operations at the moment. Now, it's a very large 4-star, 2 golf courses, spa, all of this, and they employ hundreds of people. So they have to look at water reuse technologies, and they're having to implement all of that. Now, that's really, really good, and it's a real positive step. The downside is, what I see is, when those conversations, I'm not picking on this business because they're doing a very good job, but when those conversations are being had around water efficiency and invest in water efficiency, if the payback wasn't good enough or quick enough, it didn't reach the boardroom. So for me, water scarcity is now almost leapfrog water efficiency in terms of the focus it's getting for organizations, which is really good, because the risk to businesses now is, don't want to be overly dramatic, but for some organizations, it will really, really hamper them. And it will stop. We've got, food organizations that we work with, that their production has to be reduced over the summer periods because they can't create enough water. We work with Muller a lot. They've just acquired another business, taken on a new site. The excellent thing that they did, the first thing they did was ask us to come in and do a water impact assessment. That's the first thing they wanted to look at, was the direct and indirect use of water, and how are they best to set up their site to be the most effective for the way they're doing. So there are organizations that are fantastic, and they're absolutely ahead of what they're doing, and there's some organizations that are behind. So the risk is real, the risk is today. Yes, there's cliff edges coming, but you cannot wait for that, because it could impact your organization right now.
Right, absolutely. And we will talk about, I want to hear more about the solutions, where you see the biggest opportunities. But Joe, when you sort of talk about sort of managing risk, right, do you see a sort of a gap between, moving from disclosure, right? It's a starting point, but then really building the sort of long-term resilience. Is there a gap in your assessment, and what are the sort of elements, the factors that are the good practices?
Yeah, good question, and it's just some really interesting reflections there, which I'd love to get onto, particularly around the price-value gap, the fact that the price that a lot of companies pay for water is just a rounding error, and yet the business value, vast. It depends on the same supply, so maybe we can get into that. But in response to your question, Matus, I mean, I think disclosure is the first step, because what gets measured gets managed. But as far as CDP is concerned, you are collecting that data, you are investigating your dependencies, your impacts, risks, opportunities, with a view to either influencing or changing decision making. Right, that's what matters. So that the data layer is foundational. Because it grounds the narrative. It helps you understand where you are. It helps you understand what your risks and dependencies are, and then you need to act on that. So it's really that multi-step process. And in terms of sort of what good looks like, this is always the challenge with water, because for decarbonisation, you want to reduce your CO2 emissions, scope 1, 2, 3. Yeah. It's a fairly well-established framework. We have our carbon accounting methodologies, roadmaps, and so forth. It's a hard thing to achieve, but it's a relatively straightforward thing to understand. I think where water can be more challenging, particularly for multinationals who have complex global supply chains, is that there are actually multiple things that need to happen at once. It's not a case of either or, it's a case of yes and. So we would say the first step is really understanding and disclosing what those dependencies, impacts, risks and opportunities are, mapping your supply chains, understanding what your upstream exposure looks like. And then it is reducing your withdrawals. That means investing in efficiency measures, with a view to essentially reducing your dependency and therefore your risk exposure. The less water you're withdrawing, the less likely you are to suffer, adverse consequences from, for example, a changing licensing regime. And that's happening already in the UK, that we're talking about changing licensing regimes. That's because, for all its many flaws, the UK water sector has a relatively mature regulatory environment. However, many parts of the world where companies have upstream supply chains, particularly in production regions of emerging economies, not only is water either underpriced or not priced at all, but the water governance infrastructure, the regulatory architecture is, in many cases, insufficiently developed to actually make allocation decisions that are aligned with the health of the watershed. So we see unsustainable groundwater depletion occurring in regions of the world where essentially companies are able to abstract at a rate at which aquifers are depleting beyond the point of no return. And this is where there are those cliff edge scenarios. The UN has just put out a piece on what it calls water bankruptcy, which is where it's identified a number of basins around the world, which even with best efforts towards restoration and replenishment, those basins are unlikely ever to return to that level of health that they had prior to their resources being diminished. So I think that the picture is a challenging one for businesses, and it's a case of understand, measure, disclose, but then reduce your withdrawals, treat your pollution, invest in wastewater treatment, set targets that are aligned to the health of the basin, and make sure that you've got board level oversight of water issues, because that governance piece is also a critical part of this story. Water can't be seen as something for your sustainability teams to handle and to report on. What matters is actually your business resilience, and that's underpinned by water for so many sectors.
I completely agree. The organisations we work with that do this well have board level approval. And you hear it in the commentary, in meetings, I'll need to write a report, that will need to go up to here, we'll need to get sign off, but that's a known thing. People are speaking in the right language. You speak to an organisation that doesn't have that, and it's very, very obvious the minute you start having a conversation with them.
Right.
So if you don't have that attachment right to the top, and I know this sounds obvious, but if you don't have that attachment, things will not happen.
Right.
And to your point on value, water's only valued when it's not there.
Sorry?
It's only valued when it's not available,
Oh, it's
right?
not available,
And it is incredibly cheap.
Yeah.
Average potable water for a business in the UK, £2-3 for 1,000 litres.
Well, so it needs to be priced.
I'm not saying the price needs to go up,
Differently.
because prices have gone up a lot recently, and it's hurting businesses a lot as well.
Right.
But appreciating value of something is hard if it's very, very cheap, is my point.
Can I comment just very briefly on pricing?
Yeah,
So
absolutely.
the political economy of water means that we are never going to see a global market clearing spot price for water, right? So we've seen with the war in Iran now that global energy prices, was it oil up 13% in a day, and natural gas, LNG, 30% price increase globally. We're not going to see that for water because the price is kept artificially low because of, complex governance implications, but also the fact that water is also a human right, and the fact that it's not tradable globally, etc. So for those who feel that, okay, we've got a scarcity problem, therefore we're going to see price increases, therefore traditional laws of economics will mean that this is priced efficiently by the market, that isn't going to happen, and businesses need to understand that the price is not going to solve the problem for them, and that's where you need these additional measures.
Right, because the trade-off is real, right? Like on one hand, you need to value, you need to price water, but on the other hand, you don't want to price out, people from being able to access it, right?
Correct.
Precisely that.
Yeah. Absolutely. And Coline, so we've heard what's sort of needed or what the sort of best practice look like. In your experience, obviously you have a sort of detailed operational plan, you have a strategy focusing both on targets, operations, etc. How does it sort of play out in your experience, and what have been the sort of big challenges in pursuing that strategy, perhaps?
I would say two things. And first, as you said, first thing, and it seems easy, but it's not, it's measuring. Because measuring takes time, especially to understand what is behind the data, because at the end of it, we were speaking about golf. Very often we had to conduct deep analysis to understand why the consumption is so high in this type of hotel and so low in this one, because sometimes technical standards were not exactly applied the same way. When it comes to golf, I'm not a golf expert at all, but it seems that you can manage your golf completely differently when it comes to water management. So understanding what is behind a measure, I would say it seems easy, but again, it's not. And then when it comes to I would say maintaining the pressure on this topic, it has to do with exactly what you said regarding investment. The first part is not so complex, because when it comes to hand shower, tap, and so on, I would say quick fix, the ROI is complex to demonstrate, but at the end of it, if you have owners believing in the topic, it's not so complex. But when you want to invest in more advanced systems, without, and perhaps that's one thing which is really tricky in hospitality, without compromising guest experience. Because, of course, it's super complex for a guest to be in our hotels, having breakfast, it's written food waste here, plastic here, water here. So at some point, they are overwhelmed by all this, I would say, guilty flags everywhere. So that's why we have to protect guest experience. So finding the sweet spot is not easy, especially because it requires investment, long-term ones. Yep. If you look at laundry systems, it seems nothing, but in some hotels, one day you have to visit the laundry. It's super impressive. It requires a lot of water, but if you want to change the system, you have huge investment. So I would say having the right experts to analyze data and finding the right business-driven approach with your owners are the most challenging when it comes to...
So maybe, no, I think, thank you. And I just wanted to really bring in one question from the audience that is really asking about that element of, how do you stay competitive? And particularly when it requires solutions that require a significant investment. So how do you ensure that, you are investing in solutions in a way that you still allow you to compete and be competitive?
So first, and it was well written, the question, we are an asset-light company, meaning that owners can do whatever they want in their hotels. So on this topic, we work in what I would call sustainability as a platform, meaning that we provide them with solutions, with support, and so on. So that's our job, and they trust us on this part. So when it comes to being competitive, first thing that we'll use a procurement lever, meaning that we'll try to gather all the needs coming from all the countries, all the geos, and to find the right solutions and to negotiate with our suppliers. First thing we will do. And second, we are trying to open our hotels everywhere so that startups or companies like yours can use our hotels as a lab to test new solutions. Because you have a lot of innovation in water management, water consumption, but finding the right solutions which work in hospitality, it requires a lot of time. So that's why, and perhaps you will see that in 1 month we'll launch again a new tender to see what is coming and so on, because very often we have startups everywhere, but it's difficult now to find global solutions which work everywhere. So that's the main challenge for us.
Yeah, absolutely. Tom, how do you see that sort of question of competitiveness and how can businesses really stay competitive?
I mean, I think from a competitive and investment point of view, there's a lot of investment available out there for organizations, which is the first thing I would say. So it doesn't always have to be spending your own money to get that return. Mosul have a £100 million water efficiency fund that's just going through consultation at the moment. That's a significant amount of investment into UK PLC, as it were. So by taking that investment and being competitive, it certainly will help you gain that advantage. Reputationally, it's fantastic. In terms of attracting talent, it's extremely positive. But you're protecting your business, and this is the most important thing, you're protecting your business against that long-term risk. People need to look at water scarcity a bit like we look at insurance in a way. Nobody likes paying insurance, but if you're not investing in your business to protect it against future issues, at some point you're going to get hurt by that. So people need to be much more serious about that, back to the point of ensuring there is boardroom level approval and a straight line down. But with those investments, and this applies to anything in the sustainability space, and to be honest, anything in business, but if you aren't able to justify that investment and align that to a strategic outcome of your business, you're going to struggle to get buy-in. But if you can align that investment to a strategic outcome of your business, you're much more likely to get that investment and gain that competitive advantage.
Absolutely. And just turning to a couple of questions from the audience, there's one intriguing one about whether sort of a key or a solution to sustainable water use might be to move to more sort of decentralized water systems. Any thoughts on that? Would that contribute to a greater risk?
It depends what we mean by decentralised. So in the UK, in England, you've got about 30 different wholesalers. In Scotland, you've got one wholesaler. I live in Scotland, so I'm quite familiar with the setup in Scotland. And it is very different because if you're an organisation in Scotland, underneath that infrastructure, it's run by one organisation that is publicly funded and it's a public domain organisation. Okay, as opposed to privately owned and privately run organisations. So it's not just the decentralising or the homogenising or whatever it is. There's the funding schemes, everything that goes with it. So it's a very, very complex question that I can't answer in a minute, I'm afraid.
Right, absolutely. But we are sort of running out of time, but I wanted to make sure that we touch on the sort of questions of enabling environment. So we talked about pricing, about governance. Coline, you also mentioned partnerships, working with people on the ground. So in terms of that sort of enabling environment, what are the sort of key things that you think are currently missing and you would like to see taking place, happening more?
A bit more regulation could help.
More regulation?
Yes, I think so.
Or better regulation? Or
if you look at Europe, you have different regulation, and regulation is not so strong when it comes to water management. So we're happy to have CDP, but with a bit more regulation would be helpful to move forward.
Okay. Joe?
I would say increased uptake of water data in the capital markets. And this is something that we're seeing more of. So we're seeing institutional investors increasingly requesting water data. That's part of why the disclosure numbers are going up. Those 10,000 companies are not disclosing to CDP because it's a fun process. They're doing so because in many cases their investors are saying, we want to know what your impacts and risks are. So we're increasingly seeing movement in the capital markets to actually make use of that data and make capital allocation and risk pricing decisions accordingly. So I think there is further to travel on that trajectory as well.
Yeah, data is the biggest gap. Okay.
Data is the biggest gap.
Yeah, and with more data, we do a lot of data and insights with customers. You've got smart meter rollout coming across the UK at the moment, but it will take 5 to 10 years to get there. But that is going to be a wealth of information that people will be able to use through a myriad of economic and insight-led things.
Okay, so that's a very clear message for all of you. More data, better data. We really need to fill the gap. So unfortunately, we're over time, so we have to wrap it up. But thank you so much, Coline, Joe, Tom. It was a fantastic discussion. Please join me in thanking the panel. Thank you.
Thank you.
Okay.